This quote is quite the long one. So here goes. Instead of hoping you must fear, instead of fearing you must hope. You must fear that his loss may develop into a much bigger loss, and hope that his profit may become a big profit. It is absolutely wrong to gamble in stocks the way the average man does. That's from Jesse Livermore. So without further ado, here is trading psychology. Alright everybody, as always, if you find anything in this video helpful or useful, please like and subscribe, and let's jump right into it. So I broke out the handy dandy PowerPoint here. This is going to be a lecture style video. I've got, I think, one chart at the end while I'll give you some visual aids, but this is mainly going to be an audio recording of me just explaining to you what I've learned over the past, about year and a half, 2 years of me learning to trade. Alright, so what I did today is I'm going to give a brief description of two main categories of how you can see trading or psychology rather, in the trading markets. And that is, the first level is trading on a personal level. That is, how do you personally handle trades, and how can you improve your trading process? And the second main category will be psychology reflected in the markets, basically explaining why certain patterns occur. Stuff like that. And so, like I said, this is a very brief video. This might actually come out to be a lengthy video, but in terms of the topic as a whole, I've probably read a couple dozen books over this already. If you guys need, book suggestions or anything, just go Google it. This is a broad topic, and it really, really does help you improve as a trader. Now, I'm going to go ahead and jump into this and start talking about trading on the personal level. And I'm going to tell you right now the rule number one, whenever I launch, an official training guide somewhere down the road after I've made my millions, this is going to be the number one rule I tell people. Trading is not about the money. You do it for the money, but you can't think about the money, if that makes sense. Okay? Money comes with hard work, no matter what you do in any field. I'm still in college, and quite frankly, I'm really digging in, trying to figure out how the top dogs of the world are making it, and every single one says the same. You have to do the hard work in whatever field you're passionate about, and the money will come with it. You don't do it for the money, you do it because you enjoy it. Right? Trading is trading. If you don't enjoy trading, stop trading. If you're doing it for the money, I'm sorry, you're not going to make it in this field, because you just don't actually care about the process of trading, if that makes sense. I know so many people, I call them temporary traders, right? These people that email me, these people that ask me, these people that keep up with me for about a month, and then after losing a couple $100, they're like, you know what, I'm going to move on to something else. A lot of people just cannot, they're not wired, they're not genetically wired to be traders, and so they get into this because they heard you can make money in the stock market, right? And so then they started looking the easiest way to trade, and then they somehow found these things called binary options, and then they started, trying to figure out how to make money that. I only do this because I'm really passionate about this. Like, this is my life career. Like, I'm going up to Wall Street no matter what happens with my major, and I'm just going to go trade until I make it, right? Because I really enjoy this, So along those lines, what I'm trying to get at is, if you need money, right, this is not the field for you, right? Especially if you're in a bad place if you're in a bad financial place in your life. I recently had this one person email me saying, I need $800 by next week. I've got $20. Can you help me? And I'm going to tell you right now, no, I cannot help you. I'm a trader, not someone who can make money appear out of air, right? And I'll get into this later, but you can't think about the money. You have to think more in terms of odds, percentages. What are your chances of winning? Is it a valid setup? Does it follow your system? You can't actually think about the money when you're trading. But obviously, if you perform good trades, then you're going to get good results, and good results means money. Right? So that's my number one rule about trading. That is the number one thing you have to learn if you want to get better at trading, is don't think about the money, think about the process of getting the money. Okay, so the next major rule I have is humans are terrible traders. This is reflected across every single trading book that I've read, right? The cliche quote is, let profits run and cut losses quickly. But nobody does it. You can see it every single day. Nobody does that because the same patterns happen every single day, and that's because people are greedy and fearful. In these first two bullet points here, I kind of poke fun at it, but humans have pride. How is pride reflected in the market? That happens, everybody does it. When you're in a losing position, you don't want to exit the position. You want to hold on in the hopes that the market's going to come back around and, somehow finish above you. I'm going to be honest with you guys. Last night, I was extremely bullish on the euro dollar. I was wrong, right? So I was advising a couple guys on a trade that I was going to take. I'll get into this later, but I only take about 5 or 6 trades a day. Past that, I'm done because I start over trading at that point. But what I'm trying to say is, at that point in the night, I was just guiding these two guys on this trade. I was extremely bullishly biased. But as soon as I saw the market, break the support line that I was basing the trade off, I told them to get out immediately. I was like, you can always re-enter if the trade starts going in your way. But as soon as the market starts turning against you, just get out immediately, suck it up, take the loss, and look for a better setup. Cutting losses quickly is the number one thing that pride tells you you're not supposed to do, right? You're never supposed to admit you're wrong. There's a YouTuber called Trader Dante, and he's a really funny guy, and he says the Twitter traders, right? The only people who aren't wrong and have the biggest pride are the people on Twitter who constantly upload themselves, making thousands of dollars off trades. They never lose, apparently. Those are called Twitter traders. They have too much pride. They'll never admit a loss, So the next big thing that plays in markets is fear. And fear is, when a position starts going in your direction, you want to exit immediately and take your money off the market. I have this analogy. It's like if you gave someone $100,000 and told him to go to Vegas, you would ask him, how would you play your cards, right? And they'd be like, oh, I would be smart and I would take my money off the table when I got ahead. And people think they're smart by saying that, but that's the mindset of 90% of people. You can't take your money off the table when you're ahead. You have to let the winning positions run. And if you're here for binary options, which is what my channel is dedicated to, and if you're into that, definitely go check out my other videos. But binary options, right? How you can see that in trading is, a lot of traders tell me they never hold until expiration. I'm sorry, but that's not the way to trade. I've said in the past I don't like holding until expiration, but that doesn't mean I don't do it. If a trade starts going into my direction and I'm just confident it's going to keep going in that direction, like it breaks a moving average, it breaks a support and resistance zone, it's got massive divergence on various indicators, I'm going to hold on to that position and let that sucker ride all the way until expiration and take that extra money. However, if it's a risky position and I'm afraid of a loss, then I will take, partial profit. It's hard to explain, but you have to let the winners run, right? And it's hard. It's honestly something you can only learn through practice. And like I said in this last bullet point, you have to actively combat this by thinking the opposite of what you normally do. By the way, these last bullet points, these are all quotes from Jesse Livermore from the book Reminiscences of a Stock Operator. And once again, that is Reminiscences of a Stock Operator. It is a fantastic book if you're looking for great trading books over psychology. And he was back in the day a billionaire trader. Like, this guy was a hot shot. He was the best of the best. Definitely go check it out. And so moving right along here, let's get into the third main rule I have for you if you're looking to improve your psychology. Know your edge and know you can beat the market. And by this, I'm mainly talking about confidence. If you don't know what your strategy is, if you don't know what you're looking for, you're not going to make it in this game. And no, you can't just Google and YouTube and find an edge. If it's on the internet in an article, that means thousands of people have seen it, and it's not an edge. I hate to admit it, but my YouTube videos, while they are, generally accepted trading strategies, and they, in my opinion, I think they're great videos, obviously. But what I'm trying to say is, you have to take the information I provide with you and tweak it to how you trade. And honestly, I'm going to tell you guys right now, I trade a little bit differently than how I teach you, just because there's a lot of subjectivity in how I trade. For example, I place different, I trade different amounts for certain setups based on how good a setup I think the setup is. That was a lot of setups in that sentence. So apologies. But basically, I'm trying to say, if I think a position is going to win, I'm going to bet heavier on it. But I'm not going to teach you guys that, because that's how new traders, lose their accounts really quickly, because they can't differentiate between the great trades and the good trades. Okay? And it's really hard to explain, but your edge, you're going to have to define, and it takes thousands and thousands, not thousands and thousands, but it does take, hundreds of trades at the minimum to figure out what your edge is and what you're good at and how you're going to take money from other people's bank accounts. Okay? And I kind of poke fun at this fourth bullet point, because this is at least my experience. In the beginning, I used to overtrade a lot, and I used to get overconfident. And I don't think that's so much a problem after you lose some money. After you lose some money, you no longer are so excited to hit that enter trade button like you once were when you first started. You start, I don't know. It's just a funny process that every trader goes through. They suddenly stop trading as much, and it's a common pattern amongst all the top traders. Nearly all of them say, I used to be a very aggressive trader, and now I'm more conservative. It just happens to everybody. As you see, setups play out, you understand that the risk to lose money is always there, and you should only really enter on the best of the best setups. And so I really like this quote down here. I hope you guys got a chance to read it. If not, go ahead and rewind. I'm trying to keep this video moving along. It's going to be a long one. So rule number 4 is have a short-term memory. I used to play football back in high school. I was a wide receiver, and my football coach, right, he was one of the he was inspirational, if nothing else. He wasn't a very good football coach, but he was really inspirational. And one of my favorite quotes from him was, have a short-term memory. If you drop that football, if you fumble, if you trip, if you get knocked down, forget it and go to the next play and keep looking, for that good pass or the good touchdown. You know what I mean? It's the same with traders. You can't let the losers affect you, and you can't let the winners energize you. You just have to keep moving forward and treat every single, if you'll keep going along with the metaphor here, you have to treat every single down as a new play, right? You have to treat every single trade as a new opportunity, right? And you have to become, I mentioned this earlier, but as mechanical as you possibly can in your trading process. It all comes down to a process. Trading is not luck, in my opinion. Trading is a systematic approach to beating the market, okay? And you have to think in terms of odds, percentages. What are your chances of winning? Is the risk reward worth entering the position? And I'm going to be honest, my risk reward is a little bit more liberal than most of these other traders. So if you're looking for risk reward, go check out the other traders. But for what I do, which is very conservative trading, I don't mind taking, higher risk rewards. But I think that's my edge on the market, is I'm not afraid to enter, those positions that everybody else is afraid to enter. Okay, and so I'm going to tell you right now, like I said in this third bullet point, I mentioned this earlier, but I have a terrible time not letting winners and losers affect me, because I'm a very unemotional person in real life, but when it comes to money, I swear I care more about money than just about anything right now. And that's a joke, right? Obviously I care about family and whatnot. But, if I start winning, it really does affect my mindset. If I start losing, it really does affect my mindset. So I only take about 5 or 6 trades a day, and past that, I just watch and learn and play around a little bit on demo. And so Another good quote, like I said, a loss never bothers me. After I take it, I forget it overnight. But being wrong, not taking the loss, that is what damaged. That is what does damage to the pocketbook of the soul. And so I think this is the last main rule I have here, and this is perhaps the biggest hurdle that new traders have to get around, and that is FOMO. I'm sure a lot of you are aware of it. It stands for fear of missing out. This happens when you see a great setup already taking off and you want to enter it. And I've got to put I'll show you an example on a chart earlier, FOMO, where you could see it reflected in the markets. But basically, it just happens, when you see, a great trade, you weren't watching the markets, you missed it, and then you start hopping on the bandwagon, and then of course the bandwagon's going to crash and you're going to lose money, right? And I kid you not, every single time I've gotten into a trade knowing I was late to the trade, but I still wanted to make money, I've ended up losing money, right? Don't hop on the bandwagon, be the one to start the bandwagon, right? That's actually a really bad, scratch that last quote, because you don't want to be the first to hop into a position either. You want to catch it as the ball starts rolling, if that makes sense. And that's basically the opposite of FOMOs. Don't be an eager beaver, but that's generally not a problem. If you have that issue, you'll also need to address that. But in my experience, FOMO is, or fear of missing out, is a lot more threatening than being an eager beaver. And so now I'm going to move on to the next major layer I want to talk about today, and that is psychology reflected in the markets. And so the big thing I want you guys to understand is why candlestick patterns happen. Why are these patterns happening over and over? And I poke fun at this. I used to think this at the beginning of, when I was learning. I used to think this in the beginning. I used to think, people would see a pin candle and then all of a sudden they'd start selling just because they saw the pin candle. Or, they saw a head and shoulders pattern and then all of a sudden they started selling. It doesn't happen because these things happen these patterns occur on your charts. These patterns happen because of human emotions, right? The same reason why these patterns date back hundreds of years are because human emotions haven't changed over the past hundreds of years, and most likely they're going to continue to happen for hundreds of more. I kid you not, if you go 100 years back on this exact date, you'll see the same patterns happening now, today, as happened 100 years ago, right? And it's because certain emotions, and I've got a chart in the next slide where I'll basically show you some patterns that I saw in today's Australian snapshot, or Aussie dollar snapshot. But basically all these patterns happen for a reason. So what I've got here is there are so many patterns I could point out to you, and these happen because of human emotion. So first things first, I'm just going to get into the big thing. Every time you see a trend, do you notice how there's a pullback? Right? The pullbacks don't happen because the pullbacks are supposed to happen. The pullbacks happen because the retail traders, right, the guys that don't really know what they're doing, start seeing the market rise and they're like, oh, I can get it at a premium discount. Start selling, selling, selling. And then the guys that actually know that a trend is breaking out are like, all right, if you'll pardon the language here, all right, you dumbasses, I'm about to take your money and run with it, right? Man, I hate using language, but sometimes it's just got to come out, But that's all a pullback is. It's all the inexperienced traders, getting greedy or fearful or whatever it is, and start predicting a change in the market while the actual trend just continues and takes their money away from them, right? So that's the first thing you need to know. The next thing is what are pin candles? Pin candles happen when a market breaches. As we can see here, this red line represents a pivot value. The traders breach a key level, and then all of a sudden, everybody starts selling, knowing that, oh man, I just got a premium price up here above this support level, and I really think the market is going to start turning around, And that's all a pin candle is. That's the inexperienced traders seeing the market break above a resistance point, they're like, oh man, the market's going to continue to rise for forever. And then the experienced traders step back in, force it back underneath the resistance level, and then all of a sudden all the stop loss orders, the take profit orders, they start kicking in, and then the market switches directions for a short period of time. That's all a pin candle is, as we can see up here. Now, the next big pattern I want you guys to see, and I'm not going to cover all of them today because this video is already getting quite lengthy, but there's a head and shoulders pattern right here. We can see shoulder, head, shoulder. What is a head and shoulders pattern? Head and shoulders pattern is the market, starting a downtrend, but before we continue to go further, the big investment banks push it back up to a premium price to force the retail traders to exit the position, and then the big banks step in and take the big profits, which is what this huge candle represents right here. Right? This happened partially because of news, but mainly it was because fear of missing out. How I mentioned earlier, the big retail traders started, taking all the retail or the big banks started taking the retail traders' positions. The market started to fall, and then everybody was on this hype train. After the news came out, they're like, sell, 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 which is why you get these large moves, right? That is all a head and shoulders pattern is. It's just the big investment banks pushing the price back up to a premium value to get the retail traders to exit their positions and then run with the money. Okay? And if you're looking for the other psychology behind certain patterns, just Google it. There are literally hundreds and hundreds of guides on the internet about this stuff. I taught all myself this for free. You can do it as well. Okay? Now, the other thing I want to touch on is psychology reflected in the market with news. And news is just a big hype train where everybody wants to make money. You think you're smart by trading news, but in reality, 99% of the rest of the world is watching the same news source, trying to figure out what's going to happen. And a lot of the times, it's just a big row of dominoes. I've got a trading friend, and he's quite ahead of me. He's already hit 6 figures. But he calls it, if you'll pardon the language, he calls it a big circle jerk during news. Because a lot of the time, the news trading doesn't actually affect the markets. But it's just because everybody gets super excited in a hype train, and then all of a sudden they start, just going crazy, and they start, just selling, or buying. And you'll notice generally after news events, the market will generally correct itself because people realize, oh, wait a second, this doesn't actually matter. But people, just jump on the bandwagon hoping to make money during high volatility moments. And so, I like to use the analogy of alcohol. Do people actually enjoy drinking alcohol? Maybe. But they do it just because it's fun to do with other people. And you can have, you can just have some nice memories. Or not memories if you drink too much. But you know what I mean. It's like the same thing. People just do it because it's an excuse for people to go crazy, And the last thing I want to touch on here is support and resistance. And support and resistance points, if you think about it, support and resistances don't happen just because you have some silly little line drawn on your chart, right? Support and resistance zones happen because of human emotions. They occur at round values because humans put emphasis on round values. And why do the markets cause people to exit their positions? Because they know as soon as the market gets to that point in the market, they want to take their profits off the table, and thus it creates a reaction. Why do breakouts regularly fail? Because the eager beaver hops on the breakout train, and then they realize, oh, wait a second, this isn't actually a breakout. This is just the market, breaching a line. And then the market will come back inside the range or come back inside the trending, the trend lines, and people realize, oh, wait a second, that was just the experienced traders taking money from the eager beavers. And why do trends use support and resistance levels, pivot points? Because humans wait for those points in the market to start entering their positions. Right? It's all a big human emotion driven market, if that makes sense. I was sorry, I was trying to figure out a word there to say. I don't know where I was going with that. And the real last thing I want to touch on is brokers. Psychologically, you have to understand that brokers are not your friends. They want you to lose money because that's how they make money. It's called conflict of interest, and make sure that you use a decent broker, right? And even then, make sure you understand how the broker makes their money. You know, just last week or a couple weeks ago, there was a huge scam where it was like FX.com or I don't know, some big forex trading where it offered retail opportunities or retail traders the opportunity to trade on the forex markets. They were taking positions opposite the retail traders, so that way the retail traders would lose money, right? Brokers want you to lose money so they can take your money, right? And then you've got another type system, which is what Nadex uses, which is what I use, where they take commissions. And I know Nadex is the real genius behind trading because they don't even have to trade and they're just making money off of everybody, you know? You just have to understand that brokers are not your friends, and get rich quick is not going to happen. That's how people blow their accounts, and that's how brokers make money. So I hope you guys found this video useful. Sorry for the length, but there's a lot to cover, and even then I've only briefly covered what I want to cover, but unfortunately, you know, I wanted to keep this video at a certain length. If you have any suggestions for any